Hello everyone, today our group we're going to share with you about the government bonds, or well known in Indonesia as a obligasi pemerintah. What is the government bonds is? Well, the government bonds is one of the safest investment instrument. Why it become the one of the safest investment instrument? That's because they issued and also they guaranteed by the government of Indonesia. They help the country to raise the funds for development project like IKN for example, while they giving the investor the very secure way to grow their money. Well, sounds interesting, right? Have you ever wondered how that actually works? Well, let's find out together. So, let's continue to the video.
Government bonds are debt securities issued by the government to finance state spending or state development projects. When someone buys a government bonds, it means that they are lending their money to the government. In return, the government promised to pay interest. This interest is what we call a coupon, and return the principal amount when the bond reaches maturity.
In Indonesia, government bonds are issued by the Ministry of Finance, specifically through the Directorate General of Financing and Risk Management, or DGPPR. The purpose of issuing these bonds include funding the state budget, or APBN, financing infrastructure and public services, and stabilizing financial markets and providing safe investment options for citizens.
So first, they are fully guaranteed by the government of Indonesia, which means they have the lowest default rates. The maturity period can vary. Short-term bonds may last 1 to 3 years, while long-term ones can reach up to 30 years. Some bonds are tradable like ORI of FR series, while others are non-tradable such as SBR and ST.
Even though government bonds are safe, they still have a few risks. There's interest rate risk, meaning if market interest rates go up, bond price in the secondary market may fall. There's also liquidity risk, because some bonds can be sold before maturity lastly. There's inflation risk, where high inflation can reduce the real value of returns. However, there is no default risk, because all payments are guaranteed by the government.
How investors earn? Investors earn from two sources. The first is coupon payment, which are regular interest payment received every few months. For example, if a bond has a 6% annual coupon, the investors get 3% every 6 months. The second source is capital gain, which happens when an investor sells the bond at a higher price than when it was bought. So the total return equals coupon income plus capital gain.
Let's look at a real example. The first one is ORI 024, one of Indonesia's retail bonds. It was issued by the government of Indonesia through DJPPR to fund the state budget and allow citizens to invest safely. ORI 024 has a fixed coupon rate of 6.10% and 6.35% per year, a 3-year tenor, and will mature on October 15, 2026 and October 15, 2029. It is tradable, meaning investors can sell it on the secondary market, and it was offered from October 9 to October 2, 2023.
Another example is SBR 013 or Savings Bond Retail. This bond has a floating coupon rate with a minimum floor of 6.45% and 2 years tenor. It is non-tradable, meaning it can't be sold in the secondary market, but investor can do an early redemption during a specific period. It was offered between 10 June and 4 July 2024 and is also used by the government of Indonesia.
How to buy government bonds? You can buy government bonds in two ways, through the primary market or the secondary market. In the primary market, bonds like ORI, SPR, SR, and ST are sold directly by the government during a specific offering period. You can buy them through official partners such as banks, BRI, BCA, Mandiri, BNI, or fintech platforms like Bareksa, Bibit, Tanam Duit, and Peluang.
Just register, choose the bond series, enter the amount, minimum of 1 million rupiah, pay, and you'll receive a proof of ownership called NDS.
Buying or selling in the secondary market. After the primary offering period ends, some bonds like ORI and SR can be traded again in what's called the secondary market. This means you are buying from or selling to another investor, not from the government. Trading takes place through the Indonesia Stocks Exchange or IDX or the over-the-counter OTC bond market. It was facilitated by licensed securities companies like brokers. To access the secondary market, you need a securities account or rekening efek and an RDN or rekening dana nasabah through brokers such as Mandiri Sekuritas, BRI Dana Reksa, Indo Premier Sekuritas, Trimega, and another security. Through these brokers, you can monitor the bond price, receive coupon payments, and even sell before the maturity date if you need cash. The price in the secondary market fluctuates depending on market interest rates. If the rates go down, bonds price usually will rise.
This is the end from our group video. We have learned they are not just a safe investment, but also a meaningful way to support our country growth. Through government bonds, we can contribute to Indonesia development while earning a steady returns. A true win-win for everyone. Thank you so much for watching our video. We hope you enjoyed and learned something new about the government bonds. Thank you.